On, let's talk about a very interesting comparison today. So, Swiggy posted numbers yesterday, and you already have so much of focus on an eternal. So, of course, Zomato's Zoom has been aided by its dominant quick commerce arm, but we also saw Swiggy move ahead in quick commerce in terms of volumes. Of course, there were losses that were coming in. Mahima is joining us for a comparison. Mahima, you're calling it the big cook-off.
Well, yeah, so I think it's because they've given this header because Swiggy has managed to do well in terms of where the food delivery aspect stands. Let's try to pull that up. But before I go on to that, earnings per se, how it panned out for the two competitors. For Zomato, revenue growth was better than expectations and losses narrowed overall sequentially in its quick commerce business. And that was kind of the reason why investors were happy with the counter, and we saw an uptick in the stock for 2 days straight. Swiggy on the other side, revenue was better than estimates, but PAT and EBITDA losses both widened sequentially as well as year on year, and that is something that the street is not appreciated, and that's why we're seeing the kind of pressure the stock is seeing today. In terms of the overall metrics in the food delivery business, gross order value. Of course, in the food delivery business, Swiggy has managed to outperform Zomato in terms of the overall revenue growth. But in terms of operational metrics, gross order value for Zomato is higher than that of Swiggy at 10,700 odd crores versus that of 8,000 odd crores for Swiggy. The GOV growth has been better for Swiggy, 19% this quarter on YOY basis and 16% for Zomato. Take rates have also been better for Swiggy at 25.7 odd percent versus that of 24.7 odd percent. So, percent difference there. The monthly transacting users, of course, is higher in Zomato at 20.3 million versus that of 16.3 million. So, Zomato has managed to have more monthly transacting users in this case. But in terms of the quick commerce space, that is your Instamart versus Blinkit, gross order value, of course, in the quick commerce game, Zomato still is ahead of Swiggy, and probably 2 or 3 odd quarters analysts suggest is ahead of Swiggy right now. The gross order value at 11,800 crores for Blinkit versus that of 5,600 crores for Instamart. So, less than half when it comes to the gross order value. GOV growth, that is your gross order value growth at 21% for Swiggy, but much higher at 25% in something like a Blinkit. Take rates have been again far better in Zomato at 20.3%, that is your Blinkit, and versus 15% in Swiggy Instamart. And monthly transacting users, however, are better for Swiggy, and this is because they have an integrated app, but around 7.6 million for Blinkit. In terms of the overall cash balance, now Zomato has been sitting on a huge cash pile of around 18,800 crores, and Swiggy is sitting on a cash pile of around 5,300 crores. But Swiggy has gone ahead and said that they'll now be cautious in terms of dark store additions, and that will aid their cash balance overall. Dark store guidance, Blinkit has gone ahead and said that they'll do 2,000 dark stores by the end of 2025. So that guidance remains unchanged. But Swiggy has said that dark stores have now peaked out for them. Going ahead, Blinkit says there's visibility of 3,000 dark stores once the 2,000 dark stores it achieves by the end of 2025, and it will add for Instamart, that is Swiggy Instamart, they've said that now going forward they will add dark stores only as per where the demand is, plus they need to be 100% operational and need basis. Lastly, in terms of what brokerages are penciling in, Macquarie is the bearish one here in both of the counters, where it's given underperform for both of these counters. 150 is the target price for Zomato and 260 is the target price for Swiggy. But Jefferies and Citi both maintain buy on both of these counters. Jefferies has a 400 target price for Zomato. Lastly, in terms of what analyst recommendations are as per Bloomberg, there are 28 buy calls and 4 sell calls for Swiggy with a return potential of 31%, much higher than that of Swiggy, which is at 11% return potential, and there are 19 buys, 3 hold and 3 sell calls when it comes to Swiggy. In fact, we spoke to the management of Swiggy to understand as to what are their internal expectations of turning EBITDA positive. Listen to what he had to say.
Yeah, so specifically on the EBITDA for the corporate side, while on the food delivery business, we have given the guidance that, over the medium term, you should expect a 5% positive, on the gross order value. On the quick commerce side, we want to make certain calibrated investments. So the guidance currently is only on the contribution margin line. We do not want to right now box ourselves on the EBITDA side, considering that the category itself is seeing pretty heightened levels of growth as well as new players coming in and marketing investments that need to be supported to make up and to support the 100% plus growth that we are seeing. So we want to make keep ourselves the flexibility to be able to continue to invest for growth in this segment.
Okay. I just want to get a quick view here on the Eternal versus Swiggy debate that we've been having. Avinash, you want to come in on this first?
Yeah, Tamanna, I think clearly Swiggy is catching up, but I think, if you look at the performance of Zomato, that is Eternal, I think they are a tad better than Swiggy. And I think, the markets are also more comfortable and convinced on the business model with Eternal. Clearly, Swiggy still continues to record EBITDA losses. And most importantly, I think at least for the next 2 to 3 quarters, the segment in which they operate is going to see a lot of heightened competition. So, I think volumes may go up, but at the cost of margins. So we have been telling our clients that Eternal would be a better choice if one were to take a bet on this segment. And I think in any case, these are bets which investors need to take for the next at least 18 to 24 months, because before that, it's very unlikely to see very big kind of improvements on a quarter to quarter kind of level basis. So I would say that at the current levels, Eternal looks pretty attractive from a long-term horizon. Swiggy will have to wait for at least maybe a couple of quarters before we see some improvements on the EBITDA and the cash flow.
What about you, Kunal?
Yeah, I think for Swiggy, I think here the stock on the technical charts have already given us a rising trend line breakdown. So the chart is weak. You can expect further downside. I think any bounce could be a good opportunity to exit. You can expect further lower levels on the downside towards 380, which is the next support zone. And once that is taken out, you can expect even 340, 330 coming in.
Okay. All right. We'll ask Kunal a little more about his BTST ideas, but that's after a very short break. Stay tuned.